I'm Matthias Knapp of Opalesk, and today we are visiting Chicago Atlantic, which is based, of course, in Chicago, Illinois. Chicago Atlantic is a private markets asset manager focused on opportunistic lending to North American investment opportunities that are time-sensitive, complex, or in niche markets. They are experts in secured lending to the U.S. cannabis industry since 2019 and have produced outstanding investment returns. The cannabis industry stands out because a very limited supply of capital chases a seemingly unlimited supply of deals. Most markets behave in the opposite manner. Today, we will talk with Andreas Borgmeier, PhD, one of the three partners of Chicago Atlantic, about their background, industry focus, investment process, and outlook for the next years.
Andreas, Chicago Atlantic is an alternative asset manager focusing on opportunistic credit. So please go ahead and introduce your firm.
Thank you, Matthias. Our firm, Chicago Atlantic, is based in Chicago and Miami, and we have loan originators all across the U.S. We've closed over 50 loans in the past 4 years, comprising about $1.8 billion in total credit, of which after repayments, about $1 billion is outstanding across our committed capital vehicles and our co-investments. And we've delivered strong returns to investors since 2019. And our special sauce, and I think the reason behind our success, is our team's diverse and complementary background. I met my partners, John Mazarakis and Tony Capital, at the University of Chicago, while John and Tony were getting an executive MBA and I was finishing my PhD in finance. And the three of us could not have been more different. John's background is in real estate and hospitality. He developed about 1 million square feet of retail and industrial real estate and ran a hospitality company that he founded and grew from one store to over 1,500 employees. And because of his past as an operator, he's very effective at connecting with prospective borrowers, which are also operators. Tony's background is in traditional specialty finance. He spent his career at Wells Fargo Foothill, First Midwest, Gibraltar, and Stonegate, where he was in both bank and non-bank asset-based lending roles and learned the benefits of great credits and the pains of not so great credits. So he brings an institutional credit perspective to our team. Tony has underwritten over $5 billion across over 150 loans in his 15 plus years of credit experience. I got a PhD in finance at the University of Chicago and started a risk management consulting firm that was focused on FX hedging and quantitative consulting. I spent time in Washington, D.C. as a senior advisor at the U.S. Department of Health and Human Services. And I first came into contact with private investments when I was underwriting litigation finance transactions. And at the time, John and Tony approached me with the idea of lending to state licensed cannabis operators. And since then, we've always focused on building an asset management firm, have built a team of 50 across investment professionals, investor relations, accounting, legal, compliance, everything you would expect from an asset management firm of our size.
So you focus on lending to cannabis operators. Now tell me, why did you pick this industry?
When looking into the cannabis industry, we quickly realized that there was seemingly an unlimited number of deals, but only a very limited supply of capital chasing these deals. And that's what we thought and then saw would create an opportunity for alpha as well as scale. If you think about it, cannabis is really the only novel industry where we know that demand already exists. It's about $100 billion in top-line retail revenue in the US, but most of it is still in the illicit market. The legal state license market currently is about $25 billion in top-line retail revenue, and a multiple across the whole value chain is expected to grow to about $100 billion by the end of the decade, driven by continued state-level legalization as well as increased consumer adoption. But cannabis is still prohibited at the federal level, which means that most banks and most institutional lenders cannot lend in the space, which really creates this opportunity. And now with Republicans taking over the U.S. House, any prospects of cannabis legalization have gone far into the future. But the key takeaway is that the growth and the momentum of this industry is really undeniable, and that growth requires meaningful capital. If you think about the cultivation and retail facilities, it's a very capex intensive industry that creates that need for capital that, combined with the limited supply that exists, creates the opportunity that we're capturing here.
Could you describe to us in greater detail your investment strategy when lending to cannabis operators?
We make senior secured loans secured by real estate, UCC all asset liens on equipment, receivables, inventory, deposit account control agreements, IP security agreements. And within cannabis, we really focus on the limited license markets. That is where the number of cannabis licenses is capped at the state level, like Pennsylvania or Ohio, that permit cannabis only for medical use, similar Florida and others, where the growth has come from more and more medical patients signing up, seeing the medical benefits of cannabis for pain and other treatments, and we're even seeing clinical studies evolve in that space. Now, the loans are typically to vertically integrated operators that have both cultivation and the retail dispensaries, and we like to keep loan maturities short. So our loans are generally 2 to 3 year terms, weighted maturities of about 2.5 years. And they have amortization with bullet payments at maturity, which reduces the exposure over the life of the loan. And we like the industry because it's growing year over year, even in the current market environment. And because of the limited supply of capital, that really creates both better economics, but also better structures, which is what we care about a lot as lenders.
Andreas, do you also make loans outside of the cannabis industry?
You know, selectively, yes, because we have a loan originations team across the country and they see a lot of deal flow, especially now in the current environment. So we evaluate pretty much everything against the lens of recession resiliency and that it meets our risk and return parameters in terms of structure, collateral, return, etc. So it's out of favor industries that banks don't like, for example, healthcare staffing or project finance of air pumps at gas stations, diversified portfolios that banks don't understand the collateral, but that have great terms as an underlying loan.
Now tell us also, how does Chicago Atlantic originate loans?
Our originations team of 7 investment professionals is led by John, and we focus on direct outreach to borrowers, going to trade shows, industry conferences, getting referrals from law and accounting firms. We use marketing, email marketing, CRM technology, etc. And we really pride ourselves in that direct originations because in most of our loans, we are either the sole lender or the lead lender and admin agents, which means we have the relationship with the management team. We get to negotiate the documents, we monitor the loan, and while we haven't had to exercise any remedies, in the event of default, we control the process, which is also a big benefit.
So, when you select loans from your originations pipeline, what do you focus on during underwriting?
So in underwriting, we focus on a number of key areas. First, we're experts in the industry because we've been underwriting cannabis loans for the past 4 years, and that's really evaluating the operations of the borrowers. Good management teams, efficient operations. A senior team member of our investment team goes on site to every opportunity that we lend on. The second is that each state is really a different investment thesis because each state is regulated differently. Like Pennsylvania, that has medical cannabis only, they only have 25 licenses for grower processors in the state of over 13 million people. Third is the collateral that I mentioned. We're always senior secured, UCC, all asset liens on the equipment, receivables, inventory, real estate mortgages. Personal guarantees are very robust validity guarantees in addition to that. And what's most important for cannabis is securing the licenses because they're very valuable if they're capped in a state, which creates an oligopoly. And we secure those by getting a stock pledge of the equity in the business. The next component is really looking at the financial underwriting, but from an operational perspective. So looking at the square footage of a facility, how many grow rooms are there, is it single stack, double stack, what is the yield per light, to really operationally understand the financials of the borrower and how it compares to others in our portfolio, others in the state, that we can have actual benchmarking for evaluation. And finally, we work with top law firms that have both cannabis and real estate credit practices to have lender-friendly documents. And we have a great credit team doing this. Tony, with his credit experience, leads our team of bank and non-bank investment professionals that come both from a real estate and commercial finance experience and have, at Chicago Atlantic, together underwritten and closed over 50 loans comprising over $1.8 billion in total credit.
And what is your approach to risk management and downside protection?
First is really the collateral that I mentioned, and always being senior in the capital structure. And it's also important, what I mentioned initially, because it is a fast-moving, fast-growing space, to have short loan maturities and amortization to reduce our exposure and be able to get out of loans if we don't like the performance, versus being stuck in a 5 or a 10-year loan like is more traditional in other industries. Fourth is having covenants. And there we like typically a minimum cash covenant between 10 and 20% of the loan balance that the borrower has to keep at all times in a bank account subject to our control agreement, because cash doesn't lie. And debt service covenants that are tested monthly based on trailing 6 months, so very timely, very sensitive, to do what we call create tabling events. Because we want to be able to implement corrective action before there's an actual payment default or before there's any potential loss of principal. And that's why we implement these covenants to, if they are breached, require the borrower to raise equity and pay down the loan, or sell the business, pay down the loan, and still walk away with a bunch of money, versus waiting until there's a payment default and then there's material deterioration. And the final component is really diversification. In our current portfolio, we have 36 loans, and the position size is generally not above 5%. So diversification is also very important for us, both in terms of size and across states. We're in over 14 states that we have exposure to right now. No, actually, we've had numerous loans pay off at maturity or prepay. We did have one loan where we were not happy with where performance was going and used a covenant default to actually force the borrower to refinance us. We gave a 3-month deadline. We charged default interest, and then we're actually refinanced by another more expensive lender than us, collected a nice make-whole premium, and had a great IRR on the investment. So I think that's really important to understand in the lending business, that with careful structures, those are opportunities for reducing risk and getting out of a loan, and at the same time increasing IRRs by charging fees and default interest. And while we haven't had to use workout experience, we do have it on the team. Tony spent his early years at Wells Fargo Foothill doing liquidations and workout during 08-09. We have other professionals on the team that managed a $1 billion commercial real estate portfolio that was in default during the great financial crisis of 08-09. So it's good to have that experience on the team. I'm too young for that, but I know we're in the lending business, so eventually we will have to exercise rights and remedies.
Can you also describe to us the performance of your investment strategies and your track record?
Since inception in 2019, our private lending strategy has delivered net returns of over 16% annualized. We have over 500 LPs that range from high net worth individuals to private wealth managers to family offices, both domestically and internationally. And I think what we're most proud of is actually having built a team of 50 that comprises investment and back office professionals.
What is your outlook over the next couple of years, given the current macro environment?
Well, we may actually be in a recession already, even though it hasn't been officially declared yet, and rising interest rates certainly have their effects on the macroeconomy. And we think that cannabis is very resilient and has low correlation to broader financial markets, because if you look at the underlying cash flows of our borrowers, they're really driven by state level legalization, and medical cannabis is used like a pharmaceutical, which, if you look at the pharmaceutical industry, that's typically very resilient in a recession. And the non-cannabis loans, we always, and since starting out in 2019, have always evaluated against the lens of recession resiliency. So what we're seeing now is a well-performing portfolio, and at the same time, banks and other lenders are pulling back. So we're seeing great companies that are paying higher borrowing costs, offering great structures that we can take advantage of. Our loans are floating rate, so we can lock in high rates with prime rate floors. I think that's a great opportunity to generate attractive loans over the next couple of years.
So Andreas, we talked a lot today. We spoke about what makes Chicago Atlantic unique. We spoke about your unique focus on lending to cannabis operators and why you do that. We spoke about your successes and also your outlook and prospects going forward. So thank you very much and all the best.
Well, Matthias, thanks for the visit. Great to have you stop by, and I hope you'll be back in the future.